Let's go straight into our next guest, and let's shift gears a little bit as we head into the closing bell. 7 minutes left in the trading day. U.S. stocks are having strong sessions. Michael Jones, the CEO at Caravel Concepts, has his eyes on some non-U.S. stocks, though. Mike, is now the time to think about dabbling elsewhere as they shake off their coronavirus pandemic, as we've been doing now for months?
I absolutely think so. If you look at the case that has kind of caused the U.S. market to sort of trade sideways with a lot of chop for the last month or so, what people have been worried about is inflation. And you look overseas and absolutely no one is talking inflation or any retreat from central bank aggression in the European markets. You're seeing incredibly strong earnings. We're seeing the biggest earnings beats in history in Europe right now. And I think that, combined with, you just saw a whole raft of stock buyback programs get announced this week. I think all of that suggests to me that Europe is the next big move in the global marketplace. I'll add one other element to that, and that is we've seen a big move in the value names in the U.S. They've outperformed growth tremendously thus far this year. There has not been a comparable move in very value-heavy European indices. I think there's a catch-up trade as well.
What's the best way to do that? Does one have to have an expert to walk them through the specific companies, or can you buy like a value European fund?
I think value European funds, actually even the broad indices in Europe, are extremely loaded with the value kind of names, the autos, the banks, financial names. And you can get even cuter and look at the more intense value sector ETFs. I also think that if you believe that the Biden infrastructure plan is going to come to fruition, or at least some flavor of it is going to come to fruition, the European names like Shell, like ABB, they are dominant in the charger technology. And the Biden administration is planning to build, 100,000 charging stations across the U.S. As a part of their infrastructure plan. Europe is extremely well positioned to benefit from that infrastructure play.
What is the risk to the thesis? Is it that infrastructure falls short, that our politicians butt heads? Is it their FANG names coming back and just being unstoppable as they used to be? What's the biggest risk for that? Because it's the U.S. on top. It's been that way for a long time. Essentially, thinking about something else is still probably considered, I would think, contrarian.
I think if you put your finger on probably the biggest risk, and that is, if you look back over the last decade, what has caused the biggest component of the European underperformance? And it's that, FANG, the innovation leaders have been U.S. Growth has been dominating value for over a decade, and Europe just doesn't have enough of those growth names to keep up with the U.S. If you believe, as I do, that the next move, we've had our growth cycle. And, all of the money printing from the Fed, all of the things that cause the speculative names to outperform, we're coming to the end. We're not at the end. We're still about probably 9 to 12 months from an end of the Fed printing press process. But we're getting close enough to the end that it's time to think value. And when value outperforms, Europe tends to outperform.
Mike, can we see the momentum that we've seen in the pound and the euro of this past 10 days maintain?
I think the euro is undervalued, and I think if you look at why is the U.S. economy, why is it accelerated faster than the European economies? One, we've done a better job in the vaccine rollout, but we were outperforming before the vaccine rollout. It's because we spent a heck of a lot more money, and we printed a heck of a lot more money. And supply and demand works in every market, including the currency markets. So we have shoved a much larger supply of dollars into financial markets than the European Central Bank has the euro. And supply and demand works. I think there's tremendous upside to the euro, and particularly as you continue to see the U.S. generate more inflation heat than Europe. That also is going to put downward pressure on the dollar relative to the euro.
Okay, really good reminder here of the competing investments for everyone's dollar bills. Can't forget outside the U.S. and Europe. Mike, thanks for the explanation and the thesis here. Michael Jones, CEO at Caravel Concepts.